Box office hits keep happening for the Walt Disney Company, but Bob Iger gets beat up at the stock market. What is going on? Today we'll explain why the Disney stock is sitting below 90 with a negative delta versus the rest of the market. No financial advice, folks, but we're here to tell you what's underlying Disney's underperformance. Hello, ladies and gentlemen. Welcome back to the Pro Channel, where we endeavor to explain entertainment, keep you ahead of that culture curve. We're also keeping you ahead of Disney's downward curve. Take a look at this. And as we do, click the like button. Disney, over the past 6 months, down significantly. In just the past few hours, things are going poorly for the company. And folks, of course, trading now paused over the weekend. But this stock has dipped below the 90 mark numerous times. On the 5-day, take a look at this. Ignore that spike. That's an aberration. Don't worry about that one. But look at this, folks. We've been sitting now consistently under the 90 mark. Not good for Disney. If you look at the 1 month, this stock is just continuously down. A slight lift on Friday at the time of recording, but potentially it'll end lower. Yes, we do record these oftentimes ahead of the weekend. But, folks, this is not a good situation for Disney whatsoever. This company is reeling in spite of their movie reels doing quite well. So what's going on? Well, it has a lot to do with theme parks, and we're going to explain it to you with a fantastic panel right now. Let's get ready to show you this, folks. The stock not doing well today, and that's in spite, by the way, of what Deadpool and Wolverine might do for the company. Take a look at this. This is live, and it's not, is this live? It's literally live. This is over the past 5 days, and we're using this just to take a look at just the constant flowing downward of this stock. It's worse if we go out to a farther date, but I want people to see this. This is at the beginning of today, from going to the closing bell to the opening bell. This stock dropped $4. This stock is down. Disney stock is down currently 7% over the past 5 days and may actually drop into the $80 mark. We're not sure, and we don't want to give any kind of financial advice. Folks, don't take any financial advice from us. You can see here the 1 month, and you can see that we were above the 100 mark, which, by the way, being over the 100 mark, that's not good either. I mean, it's better than being under the 100 mark, but it's not as if Disney should be at $100 per share, and I'll show you that in just a moment. But this has been on the absolute collapse. The ride of a lifetime happening right now at Disney, as they're at $90.84. Now, why do I say that this is, 100 is not good? Well, folks, the highest this stock has been recently was just prior to the vote for who would be on the board of directors. And there was some thought that Nelson Peltz might get on the board of directors and might bring some moderation to it. Now, you can have whatever position you wish to have in regards to Peltz. I'm not going to declare to you where you should go with this. However, the highest that it got was $122. And that was enough to stave off Nelson Peltz. And since it has been dropping. But let's go back again. And we do this over and over, but we must do it because it's the only way we can break into the common sense of the thing. If you go back to when the stock was high, this is the Bob Chapek era from December 18th, 2020 to about November 5th of 2021. All of this is taking place under the tenure of Bob Chapek. And then the battle began to take back the House of Mouse and put it squarely in the quiver of one Bob Iger. And what has happened? Well, the high point was slightly more than half of where we used to be. And now the stock is where it is. All right, let's take a look and see what the financial prognosticators are saying about this situation. This is out of The Motley Fool, and it's by Rick Munariz, who says, will Disney stock really lose to the market for the 4th year in a row? This is why this is getting important, is because we could be looking at a situation, ladies and gentlemen, where we're back into another proxy battle, where we're back into another situation of even a hostile takeover. And we've got a story at the end of the show that I think will show some light on that as well. But here's what they're saying. After a hot start, shares of Disney are lagging the market again in 2024. There's still time for a fairy tale finish. It's been an up and down year for Disney investors. Shares of the media giant got off to a hot start in 2024. At one point in March, it was trading 37% higher. Yes, back when we thought Peltz might have a chance, making it to the best year-to-date performer among the 30 components of the Dow Jones Industrial Average. It's not wearing that crown anymore. And here's the key point. This is the paragraph everybody needs to pay attention to. After 3 consecutive years of falling short against the market. Now, Let me explain what that means. If you were to invest simply in the S&P 500, or if you were simply to invest into the Dow 30, you would make more money just by investing in the total market in that way. You would make more in that manner than you would if you invested in Disney. You are losing if you're invested in Disney over the last 3 years versus just saying, here, I'll take the average sum of all companies within these parameters. Boom. And the great thing about that is there's really no thought that you have to put into, okay, I'm in the S&P. Okay, I'm in the Dow, right? There's no thought level that goes into that because you're taking the aggregate of all the stocks.
Right. So, to give a little bit of economic history here, Warren Buffett, I've never confirmed whether he's actually said it, but he said that if he was ever going to pass away or lose his ability to actually follow the market, if he wanted to take care of his wife, he would put everything into an index fund because, decade over decade, the market itself grows at a better rate than most stock traders in their trades in the market.
Right. So at this point, Jonas, you could have put your money, Jonas, into an ETF that covers the S&P 500, and that would outperform Disney for the past 3 years. That's why this is creating quite the kerfuffle amongst investors. And this goes on to talk about it, but essentially, if this happens for a fourth year, even the people who are bought into the narrative around Disney, even they are tiring out of this situation. They would like to make money. So I'll open up to the panel, but this is really something to watch. And again, folks, it's the 5-day that shows it. Take a look at this drop that we've seen, and rather than popping back up, it's actually going downwards again. And before we hand it to the panel, I just want to remind everybody, again, no financial advice whatsoever, but it's those big number marks that when you go above them or below them, it often kicks in a very large number of automated, pre-selected actions that'll take place. If this thing hits the 90 mark, one might presume that you would see an automated, initiated flurry of activity regarding the stock. That's all I'll say on it. Panel, your thoughts on Disney's dive at this time. And as we do, let's bring in Lou because I think Lou might have some things to say about this as well. But panel, take it away.
I have some real breaking news.
Oh,
General Pinochet is still dead. Anybody old enough to like that shouldn't be here with me because
there are celebrations all across Santiago at your statement. Yeah, Lou. Thank you.
Anyway, the thing I always look at is volume. And, things go up, things go down. But yesterday we somehow got, and this morning when I looked, I haven't looked lately, already over the average daily volume, which means there's a lot more stock moving. It's not just the price of a few, but a price of many.
Right here is the volume. It's up from what it was yesterday as well.
There you go. The range is anywhere from 78 to 123, and it was 12. And the average is 10. So that means people, as these day after day of losses happen, more and more everyday folks are paying attention and saying, maybe I'll get out. And unless you think it's entirely the manipulations of the big famous companies we know that run these things, who buys them? Well, little pension plans, little holding plans, little company corporate plans, and their little local brokers have their own credibility on the line when these things happen. And so they have to, because they have people that they know, if you're the stockbroker in any town, USA, and half the people there invest with you with their retirement funds, when it goes down, they're going to come to you and say, Bob, Joe, what the heck happened here? You're guarding my future. So they have to look to themselves at a certain point. And when things make big moves like this, suddenly everybody's credibility is on the line more than the value of Disney.
Right. I want to point this out, and Lou, you're absolutely correct. So the argument that we've been getting a lot whenever we bring up the stock price of Disney, the other dips that have happened over the last little while. First of all, the moment that Nelson Peltz, it was announced that he would not get a board seat, big dip. Other moments causing large dips, despite the fact that Bob Iger threw the kitchen sink at the stock price there in the lead up to Nelson Peltz, pretty much using every move at his disposal, other than saying that he's selling a large portion of the company, other than announcing layoffs. And he didn't announce layoffs because that would be unpopular. But we now know from deadlines reporting that there are layoffs coming to the Walt Disney Company. This is the thing that usually comes up when we point out those little dips is people have said, well, it's up 11% over the year. Well, no, it's really not. At this point, this is a year-to-date chart, meaning it starts at January 1st. At the start of the year, it was at $90.70. We're currently within 3 cents of that. This is they've essentially lost all the progress that they made in January of this year, which included big announcements like ESPN DTC, the moving of ESPN Lite, the Taylor Swift concert that was supposed to move mountains over there on Disney Plus, the moves for Disney Plus to merge in with Hulu, the $1.5 billion investment in Epic Games, which, by the way, I do think that's a good move on Disney's part. But this is they're running out of things that they can do right now because the Walt Disney Company does not have a lot of capital. And Bob Iger's one move is buying someone else's company and integrating it into the Walt Disney Company at this point. This is supposed to be Disney and Fox together. And right now, Disney is functioning as if they never bought Fox, but they still took on debt. They still have massive expenditures because of Fox. I'm going to say that the Bob Iger at this point, I think that they need to consider how quickly they'll be bringing someone else in and whether that needs to be a person who has institutional knowledge from the current standpoint of the company. Probably someone that has been kicked out of the company or forced out of the company might be a better option at this point rather than the 4 down to 3 that they have internally.
The main thing is do it already. What are they waiting for? They've taken so long to say, well, we have a committee and we're researching and we're planning and we're bull. Bob don't want to go. That's all. Bob don't want to go. And
that's why we believe, and I've said this, Dana Walden is likely to be the next CEO. Dana Walden also will be under the shadow of Bob Iger, who will continue to be there and hold his office until the 2030s because Bob Iger has all of the contractual consultation agreements in place. He will essentially be the CEO running the company ad infinitum until he's ready to head off on his yacht somewhere for the forevermore. That's where we are with this company. Bob Iger's in control. Bob Iger's going to be in control unless there is a proxy battle that throws everything to chaos. That's also why probably they eliminated another board seat yet again to get ready for another attempt at winning and holding on to their mouse glove power. And folks, we've come to the end yet again. Another video of pure excellence. And if you ask why, is every single one of these videos excellent? Well, it's because of you, the crew who joins us each and every time. Folks, it's true. We believe that every opportunity we have to spend time with you is a true honor and a responsibility for us. Thank you so much. We also want to say a huge thank you for your support of At Vacation Radio right here on YouTube, our original content channel. Folks, like, share, subscribe, click it, stick it to the algorithms. It's the notification bell. Drop a comment down below. Let us know your thoughts about the Disney stock and how it's doing despite Deadpool and Wolverine and Inside Out 2. All right, until next time, keep learning, keep growing, and keep having fun.